Hello, my name is Adam Muqtadiri, broker with Home Life Bayview, investor and advisor in GTA real estate. Today I want to answer a question that many are asking, and that is, should I get a variable rate mortgage or a fixed rate mortgage? And to answer this question, I started looking at the top 5 banks offering for 5-year variable mortgages versus 5-year fixed mortgages. As you can see, when you take the average, there's a 1.25% difference between the two, equivalent of 5 rate hikes of 25 basis points if the Bank of Canada raises interest rates. Another major point you need to consider when you're going for variable versus fixed is that both of them they're influenced by different factors. Fixed rate mortgages are influenced by the bond, 5-year bond yield, which is traded on the open market, versus the variable rate is influenced by Central Bank of Canada's overnight rates. So if the central bank raises rates overnight, your variable rate mortgage goes up almost instantaneously, but obviously if you have a fixed rate mortgage, it stays fixed. But let's say we want to go with a variable mortgage, it looks favorable, and I want to walk you through the analysis that I've done in my next chart. You know, right now the overnight rates from the central bank is sitting at 25 basis points or 0.25%. And if you know, we add the 1.25% difference that we got from the first chart to the current rate, you know, the government of Canada needs to raise rates 5 more times to get to the break-even point, meaning it will be at the upper end of the range of recent historic levels of interest rates or overnight interest rates, and above the average that I've defined here over the last few years. So, you know, looking into whether you should go with a variable rate mortgage or a fixed mortgage, I think if you think about risk rewards, I would go with a variable mortgage. I think obviously the risk with interest rates hikes, aggressive interest rate hikes, but rates have to go up so much for you to start losing money on this. And another major point, which is key to consider, is if you get into a variable rate mortgage right now, your payments is lower, meaning, you know, if rates go up, it's not like the bank is gonna raise your payments. Your payments are gonna stay the same. They're just gonna charge you more interest, meaning you're gonna pay less principal going forward, and your payments are not gonna change, which I think is a key consideration looking at this. So to me, looking at this, variable mortgage is the way to go right now, and hopefully it works out for you. And you know, this is all I want to talk to you about in this video. If you have any questions, you better call Adam. Thank you.